sets, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating, educational, financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have an exhilarating lineup of segments to give you all as much information as quickly as possible. As per usual, we are doing our live trading and market analysis right now through the pre-market into market open. And then today, I've got a great special for you guys. I worked on this little presentation, essentially. I don't have a PowerPoint, but I worked on a nice little outline for what to consider before investing in AI. Now, I've got a lot of feedback from you guys about what you really want on the show, and getting these kinds of like special segments I think are really nice for you guys because it gives you a nice little taste of what to look at and what not to look at from a risk perspective. So we're going to get right into that in a little bit. That'll be around 9:45, 10 o'clock. So you're going to want to stay tuned for that. We got basically 5 do's and 5 don'ts when you're looking at any AI company. And that is a big hot topic right now. As you all know, AI is basically in every single company if they want to even be a little bit successful right now. So you're going to want to stick around for that. You're not going to want to miss it. Now, before we get into the day, and part of the reason why I wanted to do this special on AI today is because of the fact that Trump is supposed to speak. Now, tentatively, it was supposed to be at 11 o'clock today. That got moved to now, I believe, 5 o'clock. Let me just double check. Yes. 5 o'clock, so after market closes on AI specifically. So I warned yesterday that that could happen intraday today, so you could see an overnight move on AI. You could see an intraday move on AI as well, as we see some potential preparation for whatever he's going to say. Who knows? I don't know. You don't know. We'll stick around and find out. But we also have other things that I want to give you guys a quick rundown of any potential catalysts for today before we get into market open. We do have the Commerce Secretary speaking, or spoke, I'm sorry, I should say, before market open. Trump is actually talking right now about the Fed and Japan and everything, because if you missed that last night, we signed a trade deal with Japan. We saw a little bump in the market, but we don't really shouldn't say we don't. We're not seeing as much of a reaction with tariff news anymore because as we just go on and on and on, and if you've been watching the program for a while, you'll see that this kind of stuff just loses its sting after a while, just a bit, and now it's just like expected. And unless it's a really big hit one way or the other, tariff news is just like, it's nice. It's going to be like basically every single time there is a trade deal, essentially, probably a tiny bump in the market, and not much else should really be expected there because the market essentially is expecting deals to eventually come to fruition that are mediocre at best. That's at least what the market looks like, especially how it reacted to this Japan deal. Outside of that, you do have Levitt, whatever hell her name is, speaking at 1 o'clock today at the same time as the 20-year bonds. So you're going to want to keep an eye on that. Again, longer bonds tend to have a bigger effect on the market because there's a longer interest rate, obviously. So you're going to want to keep an eye on that. That's at 1 o'clock. And then after hours today, Google and Tesla, big earnings, right? We're talking about AI after hours as well. So got Google and Tesla at the end, basically at closing bell, 6:30. I'm sorry, at 16:30. So 4:30 and 5 o'clock. Sorry, 5:30 for Tesla today. And you also have T-Mobile earnings, so another big company in the comm services space. You want to keep an eye on that. So starting to get into big earning seasons. You also have IBM today as well, for those of you watching that. But we're starting to get into the bigger part of earnings season. So we should see what's going on with these bigger companies, getting an idea. So very interested in AI today into tomorrow with the potential effect that could have. And if you don't know, I'll also be streaming tomorrow at 9:15, same bat time, same bat place right here. So you're going to want to stick around for that, and we'll react to the news that we saw after hours today, roll it into tomorrow's show as well. So will be a great time. Also, I did forget, we do have existing home sales at 10 o'clock today. That may bump the market around. So we'll see how that pans out. Mortgages and home sales have been iffy lately. So we'll see what happens at 10 o'clock. We'll see how that data comes through and kind of react and kind of go from there. Now let's get into the market. Let's look at SPY right now. And as I said yesterday, we did see an after-hours bump in the SPY, or in SPY, SPX, whatever you're looking at, and it caused a little bit of a rally. Now we're sitting up near 631.53 into the open. Okay. Nice little pop there pre-market. But right around the 631.54, which was our all-time high as of 2 days ago. So it's looking like we're going to gap right above all-time high, make another new all-time high. And as we're moving up, you're going to want to put an LOI, so a level of interest, at all of these all-time highs on the daily. So if we pop up there and we tap it and we reject and close under at some point, those are going to be levels you're going to want to keep an eye on, because especially as we're kind of like slowly moving up, these are going to be areas of flux that we're going to see the market react, especially as we discover essentially new price targets on the SPY as we continue to grind towards my price target of 700 before the end of the year. Now, IWM, I've talked about this ad nauseum. We talked about on yesterday's show how important that 223.32 level, like I said yesterday, get a tattoo of it on your chest already, because it is that important to you guys. This level, that is your sentiment driver. That is your bull or your bear line. That's all that matters on the market, in my opinion. If you are a longer term bull, if you're looking for sentiment, if you're looking for excitement, if you want to be more bullish on the market or even more bearish, this is the only level that matters. That's it. 223.32. Above that, overall, you're bullish. Below that, overall, you're bearish. At least that's how we're sitting right now as we look at the daily chart. And I kind of alluded to a kind of a quasi inverse head and shouldery kind of look here. Just looking at the last few candles here. Now we're trying to open above that area. You're going to want to watch this localized high. So this high that was formed on 710, that number is 226.05, which you're only about $1 off. So breaking that could lead to some bullishness. You would also break the daily red SAR as well. But the two areas to watch on IWM specifically, 225.72, I already have an LOI there. And then again, that localized high, 226.05, getting over that could mean a quick move to 227.75, or also known as $2 to $3 from current price, which would be a nice little move there for your small caps and IWM. Guys, before we get into it, we got 5 minutes till the market opens. Do me a quick favor. If you enjoy the program, if you want to see more of the program, and if you come here every day, all I ask you twice a stream. I'm going to ask you once right now. Do me a quick favor. Like the stream wherever you are, YouTube, Instagram, X, wherever in the galaxy you're watching me. Do me a favor and like, comment, subscribe, follow me, whatever it is. Interact with the algorithm. It helps me greatly. I appreciate every single set of eyeballs watching me, set of ears listening, because you guys are why I'm doing this and not doing it for anything else. All I ask is for that sweet, precious algorithm interaction. So say hi to me. Hi, Neegum. Good morning. I see you in the chat. Say hi to me. I'll respond most of the time. Drop a comment, say like, whatever, all that good stuff. I appreciate it. And again, I only ask you twice a stream. I try not to bog down the stream with the annoying plugs, but that's what I need to grow the channel, and that's how I need to grow the show, and I want to bring more content to you guys, and especially when we hit 500 subscribers on the YouTube channel. This will be an every single day show, so if you want that to happen, do me a favor and go over to YouTube if you haven't already and subscribe over there. There's also a lot of recorded content on there, and a lot of evergreen content. There's a lot of content on there that is just as relevant now as it will be a few years from now, so you're going to want to take a look at that. There's also some good stock opportunity videos on there, and I will go back and hash them out again when they hit my price targets, but there is some really good content on my YouTube channel, so you're going to want to go check that out if you haven't already, but not right now because you're watching this live and there's 4 minutes of the market open and you don't want to do that right at this point in time. Wait till like noon when it's boring, or when you're on the toilet at the end of the day. That's a great time to watch. But the market popped above that old all-time high here right into the open, so I'm actually really interested in how SPY is going to open here. UVXY down in the pre-market here. Again, for whatever reason, my VIX isn't updating pre-market, so we'll check on that. I'll eventually figure that out. But we'll use UVXY for now. Moving lower about 2% in the pre-market. NVIDIA moving up a little bit here after yesterday's little kerfuffle midday, getting a little bit of a move here. We did fill that gap yesterday and closed above the gap, so we're looking to see if we can get some bullishness coming into NVIDIA, especially as we head into, again, a very AI-sensitive time between today and tomorrow, where we could see essentially our Mag 6, right? And a lot of these AI-adjacent companies react to that. And if you're just tuning into the show, because I'm watching my viewer count go up and up and up and up and up and up as we continue on, make sure you stick around 9:45 to 10 o'clock. We're going to be talking about a special on AI investing solely. So it's going to be 5 do's and 5 don'ts when you're looking at any AI company, and how, if you want exposure to your portfolio with AI in any realm of the word, any way, this is going to be basically your little Bible of what to do and what not to do, and how you can still gain an exposure to AI without making a silly mistake. You're going to want to stick around for that. Again, that'll be around 9:45, 10 o'clock. Looking here at Microsoft now, I promised you guys I would do this. Real quick before the market opens. I promised you I would do this. I have officially opened a short on Microsoft, and it is a short via a call credit spread. So I'm short via a spread on Microsoft into earnings. Now, earnings is a little bit of a gamble, but if I do get a little bit of a flush down to this like 490-ish area before earnings, I'll take profit before then. Otherwise, I'm going to ride it into earnings. Now, it is a spread, so a spread has defined risk, obviously. I'm not just buying directional puts. And I'm also playing on IV, hopefully decaying, which it theoretically would climb into earnings, but if it moves down and that IV gets sucked out of earnings, I should have a pretty nice gain on my hand. So I am short Microsoft now, and I promise I would tell you guys when I would short on the program. So if you've been watching a while, I'm now short on Microsoft via a call credit spread. No, I will not tell you the exact strike or price, but that information can be found over in our Discord exclusive trading. So if you want to check that out, links are in my bio. All right, check out Google, who has earnings after hours today. Really crazy candle yesterday. We'll see how it performs today into ER. Be mindful of that if you are trading Google. Apple looking pretty okay here into the open. We got about a minute here into the open. Apple looks like it could be gearing up for a hard move. Earnings, like I said yesterday, could be that catalyst. You're going to want to keep a tight eye on that. Amazon kind of flattish here into the open. And obviously Tesla earnings today as well. So you're going to want to keep an eye on Tesla also. All right. Here we go. Market is about to open, so let's keep a tight eye on the market. And once the market opens, we'll look at our sectors as well, kind of see where the strength and the weakness is currently lying at that point in time, and kind of go from there and see if there are any opportunities that we could take a nice live trade on the show, as you guys like, and we'll kind of see where we go from there. We've got 12 seconds until the market opens. We're opening literally on the all-time high number, like 63154. It is on the all-time high number right now at the open. Fascinating. All right, technically we opened above it, and now we're coming back down. The market's now open. Let's see what fresh hell the market brings us today, shall we? A little bit of an expected volatile candle here on the open for the SPY. Look at the Qs. Did Qs make a new all-time high on that? Qs did not. Actually, I forgot to mark that out. 56606 on the Qs. It's a level to watch. That's your old all-time high, which much lower than the SPY, obviously, in terms of like spitting distance. So that's why you're seeing, or that's why I'm still eyeing IWM. I made this allegory comparison, metaphor yesterday, that the SPY is a rip-roaring fire and IWM is gasoline-soaked, chopped up, dried out aged wood. And if the IWM and the Russell can find its footing and get a little bit bullishness over that 223.32 level that you tattooed on your body, that is those gas-soaked wood chunks thrown onto this fire, and it's going to turn it into a bonfire inferno. That's why I'm mostly exposed pretty good with mid to small to large cap companies and a little less in the mega caps. Not that you could go wrong with that, obviously, but I'm seeing a lot of the potential more explosive growth opportunity with IWM in general, and those are obviously those companies that are a part of that index. All right, SPY rejecting that old all-time high pretty quickly here into the open, chopping down about almost $1 here from our opening price in a minute. So that's a pretty hard drop, pretty quick. Tech is looking weak, real. All right, very quickly out the gate. Microsoft dropping hard. Oh, let's see how my spreads are doing. Like I said, if that moves quick enough, then I'll be more than happy to walk on my spreads with a nice little chunk exchange. So I'll take them where I get them. You know, we'll see. Lot of movement right now. Whew. All right, yeah, I'm up a nice little chunk of change here on Microsoft. I'm a little bit of a coward when it comes to options sometimes, where I'm like, wow, I made a lot of money. I should take some of that, because I know some of you will make a trade and you go, wow, that's a lot of money. I want more. I have a real hard time doing that. I've been burned way too many times by that. Ooh, let's look at Red Robin real quick. I talked about this on the program. Red Robin is a stock I've been long since 4. I longed it again at 5, and I longed it again yesterday at $6.78. Breaking the 705 level. If you follow me over on X, you'll know this is a massive, massive level for Red Robin. Look at this daily chart right now on Red Robin. Higher lows, basically had a flat top breakout here, and you have all their adjacent names like Krispy Kreme, DNUT right here. Some of these hot names on, I guess, meme names that have to do with food service, and Red Robin's only going to reap the benefit of that with a strong technical breakout here. If it rallies, look at 751 to be your trigger. 751 goes. Red Robin is going to go more than likely to 1036. It might get a little pit stop there on the 200 MA on the weekly. Currently that number's 945. So easily, in my opinion, a $2 move here on Red Robin is cooking here on the daily and on the weekly. Not saying it's going to happen today, but pretty soon here. And again, this is a company, full exposure. I am long. I'm long at $4, long at $5. I'm long at whatever, what's the history? 678. So I'm long this company at 3 different entries. You're going to want to keep an eye on Red Robin. I think there's good opportunity there. If you like the name, maybe just keep an eye on it. Anyway, back to the market. I like to kind of bring you guys back up to speed when I talk about something on the program. That way, if you did consider an entry or consider whatever you do, you can at least have a little bit of an update here on the program. SPY kind of just chopping around here, that 631 area. Q's definitely where the weakness is. Back tested the 560.80 LOI and looking to bounce and move to the upside here. And IWM kind of flat, all things considered. Not really bearish, not really bullish, just kind of farting around here. So outside of tech, trying to get a rally now, it's looking like a pretty flat open. Let's take a look at our sectors and see what we got coming down the pike from our sectors. Utilities, strong open, up almost 1% here. Energy up almost 1%, up 0.71. Consumer staples up 0.2. So not a great sign when we see our 3 defensive sectors green and our tech red. It's flat. But our tech possibly red. No, it's red. That's not a good sign. That's typically risk-off behavior. However, I mentioned this yesterday. When IWM is strong, that may not necessarily be risk-off behavior, especially when you see all these other sectors green, with the exception of comm services, all these other sectors green. This could just be a little bit of rotation or thematic rotation out of technology and into some other sectors, but that doesn't necessarily mean that we're risk off. It could actually be indicative of risk on behavior because there's support here through the other sectors. Look at industrials up over 1% right now. Healthcare up 1.5%. Huge move on healthcare. Finance a bit flat, a little red, getting some bearish action here. Don't worry too much about XLY today, in my opinion. It's your consumer discretionary. That's your Amazon. That's your Tesla. going to be volatile today, but I really wouldn't look at it as a good or a bad thing on XLY specifically today. It's probably just going to kind of fart around, mainly due to Tesla's earnings after hours. But it's actually looking like a pretty clean set. Oh man, Red Robin, 740. We're almost near my trigger point at 751 here. Looking pretty clean here on Red Robin. This is only a 132 million market cap company, so I guess it could technically go to $10 today. Anything's possible, but volume's good out the gate. It's pushing pretty solid. So congrats if you watched the program and you've liked Red Robin along with me. I made a promise to the Discord community that we run over exclusive trading that I would take my wife for a slightly above average Red Robin burger if we hit $10. That's the big bet. That's the goal here. We're gonna get a Red Robin burger. Gotta take some of those gains and funnel it back in. So that'll be what we're doing if we hit $10. I'll share a video or picture proof if that happens. All right, SPY kind of flat. The Qs are looking to recover, and IWM is still the most bullish. It's looking a little choppy here. Again, we do have that news at 10 o'clock, which you want to be mindful of for home sales. And as I mentioned before, your home sales and mortgage rates are iffy. I mean, we actually had the 30-year mortgage rate come in pre-market today. Previous was 682. It's now at 684. I'm sorry, 6.82, 6.84. So we're still just below 7% on 30 years, which is kind of expected at this point. So the market didn't really react on that. However, existing home sales, we should see a reaction, especially in our materials ETF. So we're going to want to keep an eye on that. So where's that? Your XLB. Obviously, it's going to affect home builders and whatnot, so we want to keep an eye on XLB through that, and maybe industrials as well. Kind of depends on what your exposure is, and obviously real estate. So these three sectors here are what could be highly affected by that 10 o'clock news, so you want to be mindful of that if you do have exposure to any of those potential adjacent companies. And another quick plug, guys, before we get into a little bit more of the market, don't forget, at about 9:45, 10 o'clock, we are going to have a segment built around AI. I've composed 5 do's and 5 don'ts on how you should or should not invest in AI, and what to look at. Is basically going to be a little Bible for you to go by. So you're going to want to stick around for that. And again, that'll take place here in a few minutes at 10 o'clock at the latest. Okay. Trump just put out a tweet saying, "I will only lower tariffs if a country agrees to open its market. If not, much higher tariffs!" Exclamation point. Okay, does the market care? No. As I said before, the market does not care about tariffs anymore. It's over. We had our April drama. We recovered from the April drama. Everyone ate tacos. It's over. There is no more tariff drama. The only way that we're going to see anything really affect the market is if there is a massive failure of a deal, or there's just a regular deal and you're going to see a little 50 cent to $1 pop on the SPY. The market doesn't care anymore. It's not fearful. Remember, when you're trading and when you're looking at the market, uncertainty is what breeds bearishness, right? When the market is uncertain, that is when it's scared. And when it's scared, people sell. People are humans, right? If the market's not scared, then there's no bearishness. And guess what? The market isn't intimidated by Trump or tariffs anymore. It just doesn't care. And that's where we are right now. I mean, look, we just got a green candle off the tweet. Now, granted, it may not be directly related to that, but the market didn't sell off with him saying, "Oh, we'll make sure to tariff you." The market doesn't care. Doesn't care anymore. And I'm sick and tired of seeing people post on social media how we should fear tariffs. Oh, go, let's fear all the tariffs. You don't have to fear anything. There's nothing to fear anymore. So you shouldn't. People are trying to front run a massive rally in general, and you're going to get hurt. Just my 2 cents. And as long, what you need to worry about, the only thing that matters, again, tattoo it on your chest, on the back of your hand, tape it to your computer monitor, on the back of your cell phone, put it in a notes app. 223.32 on the IWM is the only level that matters. Above that, you're bullish. Below that, you're bearish. Set, clean, and cut. I'm telling you. Fact check me on it. Go ahead. Alrighty. We're really not seeing too much of anything, to be honest with you guys. We're pretty, little bear sell, little bit of pop here. But we're not really going anywhere here in the pre-market. Volatility's even pretty flat. NVIDIA, nice recovery. NVIDIA pumping. Nice push here on NVIDIA. Look at the 5 minute and compare it to yesterday. Your above, yeah, you're above yesterday's pre-market low. So it's looking pretty clean on NVIDIA. You could get a nice little bounce back from yesterday's poo-poo move, which I kind of alluded to before the market opened. There's probably a good probability of that happening. Microsoft not helping. And as I told you guys, I am now short Microsoft via a call debit spread. If we crack 500 and break below that, I'll probably close out before earnings, because at that point, well, actually, let's see how much I've made so far per spread. Just to be, well, it's very spready now, so I can't even tell. More than likely, I'll probably make like 30 or 40% if it breaks 50. I'm sorry, 500. So at that point, I'll probably just walk on it and be happy, take my ball, go home. No shame in your game kind of thing. All right. Let's see if there's anything else moving here. Yeah, Red Robin at 748. I really should just add it to the wall. It's interesting, at least to me. Look at 749. Tiptoeing just about there. If that level breaks, I'm telling you, we're popping. Look, you even have on the level 2 here. I mean, that's not a lot, but you got 3,000 shares parked at 750. The little baby wall there. That breaks, I'm telling, this thing's going to melt. Donuts selling off right now as well. I don't hate for you memesters out there grabbing along at $4.20 if it gets a push. So for what it's worth, if you like the Krispy Kreme, the donut, the move here, wouldn't shock me to get back in this range. Float $4 to $4.20 before getting another little meme rally and push for this potential gap fill up here, just shy of 10. So that's something I'm interested in. Also, when it comes to memes, you want to buy on the retracement. You don't want to buy in the rally. You don't want to buy the hype. Negum says, do you do calendar spreads? I do. Personally, I find it harder to do a calendar spread on something that looks like this. But, it could work out. Because if I am longer term bullish on Microsoft, and for those of you who don't know, you could do a calendar spread, which means you're basically betting on short-term bearishness or short-term bullishness and the inverse of the opposite. So in this case, assuming what Negum is alluding to here in the chat, is that he's looking at, or potentially looking at, a calendar spread with Microsoft where he could bet on short-term bearishness, but long-term bullishness, essentially using short-term options to discount a longer-term call. If you're bullish, and then the other way around is if you're bearish, discount a longer term put. Actually, I'll take that back. I don't hate the idea, because I am short-term bear on Microsoft, but longer term it could work out, so I don't disagree. The only thing I don't like about it, I mean, it depends on what strike you're looking at, obviously. I just have a hard time buying, like, even if I did that, I'd have to get a lot of premium up front, because I really do think it should get to this level. This 464, and that's a decent fall. Let's be clear. The only way it really gets there, honestly, is probably through earnings. But I would have to get a decent premium on the calls. So I don't hate the idea. The risk reward would have to make sense. That's all I'm saying. I don't hate it, though. You could definitely work out a calendar spread, and especially if you have enough time on that longer call, it more than likely will work out in your favor. It's Microsoft's not going anywhere. I don't like charts like this. People in the Discord will ask me all the time, like, oh, what do you think of the stock? And I open up the chart, and it's just almost like parabolic. And I'm like, I have a hard time. It's not how I trade. I like getting reversals. I like topping, getting a short on Microsoft, timing the tops, going down, looking for the bottom to reverse the upside, and riding the wave then. I don't like getting on the wave as the wave is already cresting. That's not my style. So I personally have a really hard time justifying that, and that's just me. There are better times for me personally where I like a calendar spread, but obviously if you're bullish on Microsoft longer term, it could absolutely work out in your favor. So I don't want to dissuade you by any means, but could be something to definitely look at. Hatchet says the Japan deal is bullish. It sets the floor 15% for the EU and Canada. China will pay more. This will have a meaningful impact on closing the deficit and hopefully bring down long-term rates. I don't disagree. Let me make that clear. What I'm trying to say from a market impact point of view, in regards to any of the deals, the market doesn't care, right? The market cares when CPI starts to go down as a result. That's what the market cares about. So we could speculate and say things are bullish in that regard because, and I don't disagree. Like I said, I agree that that is probably a bullish catalyst longer term. However, until the data comes through, that's what the market's going to care about, because it actually looks like we flipped the script a little bit. Until then, it just doesn't, the market doesn't care because things can change. Now, let's say we make this Japan deal, right? And then tomorrow it's like, screw it, we're going to raise or lower tariffs again or whatever. The deal that was made can just get gets face spat in, is kind of what I'm trying to say. So that's why the market, I think, especially when it comes to tariffs, is more reliant on the data as a result of said tariffs than the tariff news in itself. And if you don't believe me, look at the market today, and you could look at, in general, how the market reacted to the tariffs on April, right? We had that wild drop, and then we whipped back up, right? And now, anytime there's even talk about tariffs, the market's like, whatever. It's Tuesday, it's Wednesday, who cares? So it's not that it isn't good or bad. I think the market is kind of like a, I don't know, if you're religious, doubting Thomas, right? The market needs to see it to believe it. And I think that's where we're sitting at with the market. The market doesn't care if there's a deal or if there's no deal. I think what it cares about is the reaction of the deal when it comes to actually the numbers. When the numbers come out and we see the results of said deal, that's when I think the market will actually care, in my opinion. So, again, to reiterate, not that I necessarily disagree by any means, but that's just kind of where my head would be at as it pertains to anything with tariffs. All right, SPY selling off here just a little bit, so we're getting a little bit of bearish action here, mostly fueled by tech. Tech is not looking too hot right now, and I'm sorry, guys, it's my fault. I shorted Microsoft, and I'm bringing it down with me. If it breaks that 500 today, it's probably going to be a bad move for Microsoft short term, which, again, I'd probably close out my put, just to, my call credit spread, just to take profit on it and be happy at that point. But we'll see. We'll cross that bridge when we get there. I don't like to count my chickens before they hatch. So we'll see what happens. Other stocks making a move right now. Moderna making a solid move here, about 4%. Peloton making a move, 3%. I shared this one on the program, TEX. That one's making a move. And these are ones that I like. Do with that information what you will. But these are companies I like right now that are making moves. Do with that information what you will, once again. It's looking like, here, let's flip through our Mag 6 real quick. Ooh, NVIDIA, sharp reaction. It's basically, ever since I clicked off of it, it's sold off. Google, again, pre-ER, so I wouldn't read too much into Google's price action. Ooh, Apple. No. Not looking good for Apple at all. Ugh, that is an ugly day so far. Woo-wee. No. It's looking like we're going to see a lot of people either taking profit or getting defensive, and I'm just looking at the Mag 6 right now before earnings. Now, I guess that seems very easy to say as we're sitting right here, right now, and the market's going down. Google's only marginally down. They have earnings today. What's Tesla? Tesla's up. So maybe I'm wrong. I'll take that back. I'm just thinking on the fly. I take that back. I take it back. Ignore what I just said. Erase it. Delete it from the VOD. I never said it. But it does seem like the market's just a little trepidatious today. Would be the word I would use. Q's trying to stay above that 560.80. Actually, IWM now showing a little bit of weakness. Might back test this 224.17. I'm not loving how we're moving right now, whether bullish or bearish, to be honest with you guys. So I may not even trade this open, because it doesn't look very, I mean, so far, to be honest with you, it looks like it's leaning more bearish than bullish. But the sector's open so hot. So solid. Utilities are still green. Energy's still green. Consumer staples still green. Tech is only marginally down, all things considered. Real estate flat. So these are three we got to watch. Real estate materials, which is getting a sell-off. And industrials. This might be a sell-off before the news. It's possible on XLB. Because again, at 10 o'clock we have existing home sales. So that's a possibility. Just theorizing. Healthcare had a really solid open, now grinding down a bit. Financials, I'd look for banks to kind of help flip the script here based on where it's sitting right now. Consumer discretionary, all things considered, holding up pretty good. Your Amazon, your Tesla. That's basically what I look at XLY for. It's Amazon, it's Tesla. That's about it. If you disagree, sorry. That's what it is. It is a bit of a mixed bag, though. So if you're day trading, this would be, at least in my opinion, signs to be risk off on the open. I'd be more interested to see where we are after 10. So why don't we do this? Why don't I roll into our AI segment, and then we'll pitch back to the market afterwards, and then we'll kind of see where we're at. So let's do that. I like that idea. Do you like that idea? Good. I'm glad you agreed. It's like watching Dora the Explorer, and they go, what do you think? And then I'll just patiently wait, and I'll be like, good. We'll roll that into the program. The Dora the Explorer prompts. I'm sure everyone will love that. All right, guys, real quick. I do ask you twice on every show. I'm going to ask you the second time if you haven't already. My viewers have gone up about triple since I said it the first time. So if you're watching live wherever you are in the entire galaxy, on YouTube, on X, on Instagram, do me a quick favor and like the stream, drop a comment, say hi in the chat. I'll probably say hi back. Follow me or subscribe if you're over on YouTube. And don't forget, once we hit 500 subscribers on my YouTube channel, we're going to be doing this show every single day. So if you like the show, you like the content, you like what you're hearing, you're feeling even a little bit entertained, do me one favor. I don't want your money. I want your likes. So drop a like on the stream wherever you are, maybe a quick comment, anything like that. Your interactions are what the algorithm looks for, and that's what I need to help grow the show. So if you want to see more of the show, all I need is a little help from you, and I appreciate all of your eyes and ears as you're listening to me this beautiful Wednesday morning. Now we're going to roll into what to consider before investing in AI. So it's a little segment I wrote up quite a lot of notes, so I'll try to water it down and keep it as concise as possible. But essentially, I've got 5 do's and 5 don'ts for you guys to consider as it pertains to investing in AI. So we'll roll into that in a moment here. And as per usual, I will do you guys a favor and record this. That way, if you miss anything or you want to go back and listen, it'll be live on my YouTube channel, hopefully later today. So we'll do that for you right now as well. Alrighty. Now, AI is everywhere. And it's not just changing how we live, it's basically shaping up how we invest in general. In this video, we're going to break down what to do and what not to do before investing in AI. So now I'm going to start the whole thing over because I'm recording this and that sounded like crap. I write myself a little intro and I just have bullet points. So I just talk normally. So I'm trying to read the intro and I'm like, ugh, awful. You guys get the outtakes. There you go. Thanks for tuning in. All right, let's try this again. AI is everywhere and it's not just changing how we live, but oh man, I'm going to do it one more time. Oh my God. All right, last time. AI is everywhere, and it's not changing how we live, but shaking up how we invest. Now, in this video, we're going to break down exactly what to do and what not to do as it pertains to investing in AI. Now, if you're looking to ride the wave that AI has been on lately, this checklist basically you can't afford to miss. It's a Bible of what to do and what not to do when you're looking at any AI company. So first things first, and probably what you're most interested in, we're going to go through the 5 things to do before investing in AI. Now, the first thing you want to consider is researching business models, not just buzzwords. And I know it feels like that's very hard to do, especially when everyone can just go AI in their earnings call and the stock goes boom. But we have to look at things from a little bit more pragmatic standpoint. What I mean by that is looking for tangible AI products or services that actually generate revenue. So you want to consider AI automation tools, large language models, APIs, things like that. You want to analyze how a company can add AI to its current business offerings to potentially give it a competitive advantage or expand margins. That one's a big one. A lot of companies right now are using AI to cut back on expenses, which conversely increase their margins, which is a huge potential advantage to a lot of these companies, especially in the labor field as well. You want to avoid the companies that say AI hype a lot in like pitch decks, but don't really say how they're going to turn it into making money. So essentially you want to kind of ask yourself, how does AI for this company drive revenue, reduce its costs, and improve efficiency? If it can't do those 3 things, you can't answer those 3 questions, probably look elsewhere. Just saying. Now, for your second bullet point of what to do before investing in AI, I want to say it's an old adage, and it probably is. You may be familiar with it, and you may not. But when people are digging for gold, you want to be the one selling the shovels. you don't want to be the one digging for the gold, because you may never find the gold, but when there's a gold rush, there's plenty of people looking to buy the shovels. And that's the kind of plays you want to look for. You want to look for your pickaxe and your shovel plays. So what I personally look for is targeting infrastructure providers. For example, chip makers like NVIDIA and AMD. Those are your shovels, right? They're not necessarily the AI company, but they're the companies that need to exist for AI to exist, right? Another segment you could look out are cloud platforms. So you've got Microsoft and Amazon, right? Because they have AWS and Azure. And you could also look at, this one's a little bit of a far-fetched thought, but you could look at adjacent beneficiaries. So data center REITs. I found one called DLR. They're actually reporting earnings tomorrow. Or power management firms. Again, things that need to exist for AI to be successful. These tool makers will often profit even if AI, no matter what AI application wins, even if AI fails for a company, because guess what? They're still selling their chips to these companies that could flop. They're still selling the shovels to the people digging the gold, and they still make money. That's what I like to invest in as it pertains to the whole AI hype, is looking for those pickaxe and those shovel plays, the people who are selling the ability to make money on AI. And that's how I think a smart investor would look for. Now, that doesn't mean you can't get into those other companies that are directly AI companies, but having a little bit of that exposure may be a smarter way to still invest in AI without directly investing in AI in general, which we'll get into in our don'ts in a moment. Our third do is to evaluate profitability and cash flow in general. So many AI startups are going to start burning cash in order to chase scale. That's not really unexpected. In fact, it is expected for the market to see that, with these AI companies to be burning money to try to adapt and try to gain market share as quickly as possible. As a result, if you can prioritize, so out of all the options you get, if you can prioritize looking at companies with positive free cash flow or sustainable burn rates, right? Because there is a rate in time where the burn rate, slowly they burn less and less and less and less cash, which eventually can lead towards profitability, obviously. Those are ones you should look at. You also want to look at gross margins in general and see if they're using their R&D expenditure efficiently. Are they investing in things and actually making money back, or are they just investing in things and losing it? Is the spending justified? Is the spending delivering ROI? Most importantly, as we talk about evaluating profitability and cash flow, we want to watch debt levels, right? So we're still technically in a rising rate environment, and that will probably cut here soon. But AI investments often require major capital, especially right now, right? The cost has not declined yet as we're in the first foray into AI. So things are expensive right now to even build into AI. I mean, look at NVIDIA. It's the largest company in the world, and they have so many orders coming through that they can't fill them all, really. That's how much hype there is around AI right now. So it is not cheap to have an AI company and run an AI company. So if rates stay high, that's a massive stranglehold on these companies. Now, conversely, if rates start to cut, that's going to allow these AI companies to breathe a bit, which could help their profitability and their cash flow, like we talked about here. The fourth do is you want to diversify across the entire AI ecosystem. So it doesn't mean putting all your eggs in one basket. You don't want to bet on one winner. You want to consider diversifying across verticals, meaning you could have AI healthcare exposure. You could have AI fintech exposure. You could have robotics exposure. You could have semiconductor exposure. You're still exposed to AI as a whole, right? It being eventually the next bastion of the next best thing in the world, but you're not putting all your eggs in one singular basket. So that allows you to invest in layers, right? You can invest in hardware, you can invest in software, data, end use applications. There's millions of ways that you can take your money and still invest it. Even if you want to put 100% of it in AI, right? All your money in AI, you could still pick different verticals and pick different layers that you could spread your money out on, and then still reap the benefits of what could be a huge move in AI in general without risking downside, which I think is really important. Now, mixing some large cap stability with small cap stability, I think, is what matters here a lot, because you'll see some outsized move on small cap companies as they become medium and large cap and they grow, but having some large cap and even some mega cap exposure prevents you from having some more downside, because that's what you want to do. You want to manage your risk as you're looking at these AI companies. So you don't really want to go full speculative, and you really want to mitigate single stock exposure in general. and focus on capturing the broader AI adoption in general. If you can capture that through moving through these different segments and diversifying across different verticals, that would probably be the best way to do it. Now, the one risk factor I want you to consider here as we talk about this as a dew point, you want to consider thematic ETFs for broader exposure if you're someone who can't be bothered to do all the research. With that being said, make sure you do your research on the ETF you're looking at, because there's a ton of ETFs out right now that can offer you AI exposure, but they could also go against what I just said here and have a ton of money in one stock and then, on other BS things, right? So that's something you could consider if you don't have a lot of time to do research on individual companies. But at that point, make sure you at least research the one ETF that you're investing all your money into. And the last dew point is to track regulation and government trends. So obviously, this is a brand new thing. We've seen things come out with the government in general as it pertains to AI and what is starting to be acceptable or not acceptable. And this regulation is evolving very quickly, especially with privacy laws. And that's not only here on stateside, but it's also in Europe and elsewhere. There's export restrictions, or there could be export restrictions, which could impact margins, could impact your R&D timeline. So if companies research into things, that could obviously impact those timelines, or in general, international growth. Growth across the world could be impacted by these restrictions because it's going to be hard to move into new markets if there are certain restrictions that the company may not see in market A that they have to abide by in market B. In general, you want to monitor all these AI laws as they come down the pike. If you can do it, consider companies with strong compliance practices. Some companies, it's not really, how do I say this? It's not important enough yet where companies are strongly complying and like, oh, we're going to do it right away, because this isn't as busy. Like, we're not seeing regulation come down every single day. But if you want to consider the companies that seem responsive, I guess is what I'm trying to say here. And the only other thing you want to consider are potential regulatory tailwinds, which could actually favor some firms over others. So as we're talking about regulation in general, these firms that seem compliant and seem to work much quicker than these other firms can steal market share as a result. So think of it this way. If there's a new privacy policy implemented and company A gets in right away and they abide by the law or whatever, and company B is lagging on it, company A can steal market share from company B because now they can operate because they're following the law, whereas company B cannot. So there could be an opportunity there where there is a tailwind where certain companies that are quicker to react to these restrictions, I want to say, can actually steal market share from others. So that's something that could benefit you as an AI investor. Now, those were the 5 things to do as it pertains to AI investing. And these are the 5 things to do not do, to watch out, avoid for, etc. This one's pretty obvious, and you guys probably know this watching this, but you don't want to chase AI hype cycles blindly, right? You're going to see times where AI companies are going to moon out of the blue. It's going to go up 70%. And you're going to go, oh, I should invest in that. Slow down, okay? I would avoid, me personally, buying AI companies solely based on news, Reddit hype, or especially if it's on CNBC. If it's on CNBC, MSNBC, and it's been pumped, turn the other way and run. Do not touch. You may work out at some point, but at least near term, do not touch. Especially watch out for stocks that get a big spike, so 50, 100%, 200% after a vague AI announcement or AI integration. Just because a company says they're going to start doing AI or says they're doing some sort of AI announcement doesn't necessarily mean that makes them a good investment or even an AI company. What if I ran a hot dog company and I just said, oh, we're implementing AI, and the stock spikes and you don't know anything, you just buy the ticker anyway? Doesn't that seem a little stupid because I make hot dogs? What does AI pertain to hot dogs, right? It just... Be careful, because there's some companies already doing this, especially if you trade OTCs. You see this all the time. But there are some companies doing some shady things out there right now, trying to catch the wave of AI at the moment. So if you do want to look at some of these hype companies when they present those opportunities, when they get a spike, if anything, take a second, slow down, and you can look at their fundamentals, see if the sales or the users there are profits actually growing, or is it simply hot air? Because not saying they're all bad spikes, right? There could be some legitimate spikes where it's justified. But if you do decide to chase hype, I would highly recommend you consider looking at those fundamentals. If sales are there, if users are growing, or profits actually growing, before jumping into an AI hype trade. Second thing you should not do or avoid as it pertains to trading in AI or AI companies is to not ignore value multiples. Now, it's very obvious that these AI companies are evaluated very highly, a lot of them, a little too highly, which may not be the worst thing because these companies are the future, right? These multiples that they have are betting on the future expansion, the future growth of said companies. So as a result, the company gets its evaluation from the future proposed growth that it could bring. However, if that growth slows or the sentiment shifts, these overvalued AI stocks will plummet. And you may wake up one day with a very red trade on your hands in general. So if you do want to be a little bit more safe with investing in AI, perhaps consider using a PE ratio or a PEG ratio and comparing it to other AI peers to kind of make yourself feel a little bit more comfortable before considering investing in AI or a specific AI company, I guess I should say. In general, companies that are trading basically 50x their revenue are extremely fragile. They're out there. They're still going up, but they're very fragile. And it just takes one news drop, one offering, a shelf out, whatever, to drop them hard because they're so inflated. So be very, very, very mindful of that. A great example of this, it wasn't AI, but during COVID, all those work-at-home companies, Teladoc and Peloton come to mind right now that were through the sky. They're now trading single digits. Those companies will fall very, very, very hard if anything changes in the future. If what got their value changes, they're going to drop, and they're going to drop hard. So you want to keep that in the back of your head. A good way to look at this, and a good way to keep this in the back of your head, ask yourself before you purchase an AI-based company, would I still buy this if it was 20% more expensive tomorrow than today? And if the answer is still yes, then maybe you can consider a trade, at least in my book, with a specific AI company with a very high evaluation. I'll make that abundantly clear. Third thing that you should not do when investing in AI is concentrating in one or two names. So if you're overweight in your portfolio with any of the AI darlings, especially like NVIDIA, I'm sure that's extremely tempting, right? The thing is the largest company in the world, keeps going up, etc. But it could lead to excessive drawdown risk for your overall portfolio, right? Even these great companies that seem to consistently perform really, really, really well can disappoint, even temporarily. And as a result, you want to consider spreading your exposure, like we talked about in the do section. There's other ways where you could still be exposed to AI, just kind of spread out your eggs a little bit more. You kind of spread out your money a bit more. So diversifying outside of the obvious mega caps like NVIDIA and Microsoft can help you reduce your risk and actually can help juice up your profits more too, because you're getting into riskier names that are maybe mid cap or large cap, or they're in a different sector completely but still use AI. So this actually could be a beneficial thing for you instead of putting all your eggs just in NVIDIA or just in Microsoft, because there will be times where, yes, it could go up a lot, but it could also draw down excessively as well. And in general, staying too strongly concentrated in one thing could be a really bad time. In going back to the ETF idea earlier, you may think you may be safe investing in an ETF that focuses on AI, but you want to be aware of index crowding because some of these ETFs may already be overexposed. SPY, you could even argue, is overexposed because of the Mag 6 and Mag 7, right? What is it, 20-30% of SPY's value is drawn from 7 companies. That's insane. That's absurd. It might be 20%, 20-30%, something like that. Still, a large percentage of SPY is drawn from 7 companies. So even investing in just the SPY can leave you, theoretically, overexposed to AI in that realm if you see all 7 companies or all the Mag 7 are investing in AI, mainly because of the fact that it's so overexposed. What I would recommend you consider is to set exposure limits. So me personally, I don't have more than 5% of a portfolio in any one position. Pretty simple. If I like really, 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 really love a company, then I might change up my exposure and lower equity exposure, increase options exposure. So for example, do like 3 equity, 2% options. Unless it's like an ultra amazing trade, maybe I'll bump it to 6 or 7%. And even then I watch it like a hawk. But setting that single stock exposure to 5%, it doesn't mean you're missing out, because even if there's a big move, there can also be other big moves in other names that you now have exposure to because you freed up your money. So I think a limited mindset that a lot of traders have is, I can get really concentrated in one name or two names, and I'm so confident it's going to move, and when it moves, I'm going to make a lot of money. Why not be confident in the realm in which that company can operate and diversify a bit, because you could now not only reduce your risk, but actually increase how much you can make, because now you're exposed to other areas. If you believe in AI and you want to invest in AI, now you're invested in all these other areas of AI, not just the one sole thing. And I think a lot of people don't grasp that concept, where you can actually make more money while also reducing your risk. And I am all about that when it comes to trading. So that's something to definitely consider as it pertains to something not to do when you're investing in AI. Now, the fourth do not do is, don't assume that AI is basically a guaranteed tailwind. As a result, some companies will fail to commercialize AI, even after sinking a ton of money into R&D. And as a result, they can misallocate capital or even not execute. There could be execution risk. So just because a company puts money into AI doesn't mean they're going to make money with AI. And I think that's something that a lot of people aren't thinking about right now in general. As AI adoption increases, operational costs also can increase before showing any returns in general, right? So as AI grows and grows and grows, it may cost more money to keep up running AI. I mean, you can even look at all these AI companies like ChatGPT, for example. They had to lower the amount, this was a few months ago or whatever, they had to lower the amount of free users accessing the image generation part of it, because it was using too much money or too much electricity or whatever, and they had to change up their payment structure, whatever, because it was more expensive to run it that way. So they had to limit it and give more perks to the people paying, conversely. The last thing as it pertains to this particular category is dependency on third-party models. So companies that have structured their AI business around, for example, use ChatGPT again, OpenAI, may limit its defensibility. So this does one of two things. One, it lowers the barrier to entry. Anyone can get in, right? If OpenAI has open APIs that companies can just use to implement their ChatGPT program on their platform, then anyone can do it. They just got to pay the money for it. So that makes a lower barrier to entry. And secondly, it opens you up to a new risk, because what if OpenAI goes down? What if you buy an AI company and their whole business is centered around OpenAI? And if OpenAI's servers go down or whatever happens, guess what? Not only is OpenAI not making money, but this smaller company, because it will be smaller than OpenAI, is going to get shafted hard, because now they can't even run their business. So that is a massive risk as it pertains to assuming that AI can be a massive tailwind. That's why I like the companies that are including AI or have their own AI platform, where it's not the end all be all. It's not the whole company. It's something that sweetens the pot. It's something that makes a established business better. That's what I like about AI, or the companies I look for as it pertains to AI. And in general, your last do not is, don't forget macro sensitivity. So AI, as most of you know, is going to require enormous amount of energy and computating resources. So as a result, you're going to want to keep an eye on energy prices as a whole. That money's got to come from somewhere. We've seen nuclear energy been very hot lately in general, because that seems as the next bastion for AI. Again, another AI adjacent thing you can invest in are these nuke companies. The other thing you want to keep in the back of your head, which I'm not as worried about, obviously interest rates. So as they rise, as they lower, whatever, as those rates rise, which again, we're technically in we'd call it a plateauing environment, because we haven't risen rates now in a few months, and it looks like we're going to cut soon. But that can basically put a stranglehold on a lot of these smaller companies that still haven't turned a profit. And that just goes in general, not only AI. So that's something you want to be aware of from a macro standpoint. And last thing is general geopolitical risk. If there's a ship export ban, that's like the big one lately that we've been seeing. If like Nvidia having certain chips shipped to China, not to China, whatever, that can disrupt entire supply chains. If we have this geopolitical farce of people trading, not trading, whatever, that can be very detrimental if you're investing in AI companies. So something else to consider when you are trading in AI companies. So before you chase the AI rocket to the moon, you want to make sure you're prepared. The space is moving really quickly, but at the end of the day, the fundamentals will still matter. And I think that's the one main thing you could take away from this conversation. So as a result, I think the most important thing, along with that, is to be strategic, be skeptical, but most of all, stay informed. If there's one other, like just looking at all these points that we talked about, being informed is actually like the biggest driver here. That way, ultimately, you know how to stay ahead of the curve while keeping your portfolio grounded. So you're not overexposing it any which way and you're just aware of what's going on. But now I want to hear your thoughts. So if you agree or disagree with these points as it pertains to AI, let me know down in the comments below. Sound off, and don't forget to like and subscribe if you haven't already. We will see you in the next video. All right, guys, let me know in the comments on the live stream what you guys think about that segment. The do's and don'ts of AI. That was a lot. That was 22 minutes. Maybe I will start doing PowerPoints, do TED Talks. Negum says, I'm having a hard time letting go of my NVIDIA shares. I'm heavy in both my IRA cash accounts and have been since the mid-'80s. So there's a person who may be watching that I love very much, who loves NVIDIA, and is very overexposed. And I've been trying to tell said person they should consider diversifying. That's what I think would be the takeaway for you personally to consider, Negum, as well as this other person I'm alluding to. You can still make money in AI, just spreading it out. So I'm not saying NVIDIA is bad by any means, but you could take some of that money, some of the profit you made in NVIDIA, and still invest in other AI companies. So theoretically, you still have AI exposure, right? But now you can maybe invest in, like I said, what was it, DLR, right? DLR. This is a REIT that runs data centers. So this you get this is just one example of what you can consider. You're getting a roughly about a 3% dividend, not to mention capital appreciation on this REIT, which does report earnings tomorrow. So if you're going to consider it, just be aware of that. And basically this REIT, which is a real estate investment trust, focuses just on data centers. So you could take money from your NVIDIA nest egg and put it towards something else that still would profit off of the AI boon. Like this is just an example. Again, I have no long exposure, just plain example. That has exposure to AI, right? That still has exposure to the sector in general. And you could still make money off of AI and theoretically make money off NVIDIA performing really, really well because of companies like this still existing. There's other healthcare companies. I know people love TEM right now. That's implementing AI, right? I don't know. I don't have any other ones off the top of my head, but you can get into these other AI adjacent companies, and instead of being solely locked into just NVIDIA, for example, you may actually not only be more defensive, but increase the total amount of money you're making. Think of it this way. Let's say I have $100 in NVIDIA, right? And let's make it simple. Let's say NVIDIA is trading at 170. Okay, let's say I have $1,000 flat. Just make things really easy. Forget it. NVIDIA is at $200 a share. I have $1,000. I own 5 shares, right? Super, super simple. So if I sell one share, theoretically, I've got 20% of my money locked aside. Let's pretend I full ported in NVIDIA at $200 and I have $1,000 in there, so I own 5 shares. Okay. Now, for NVIDIA to go from 200 to 240, it needs a 20% move, or also however many billions of dollars that is, because it's a massive company. It would be rough math of hundreds of billions of dollars. I'm not going to say, but it would be a lot of money, right? Conversely, you could invest that money in something else. I got on my watch this here. So SoundHound, for example, if you wanted AI exposure, AI voice exposure, I guess you could say, and take the money out of NVIDIA and put that same $200 here in SoundHound, and now you've got, again, theoretically, 20% exposure in SoundHound. And for SoundHound to move 20%, you only need, it's a $4 billion market cap. What's 20% of 1160? We'll say it's at $12 to make it simple. You need a $2 move, so we need to go to 1440 for the same move. Now, it's not the same, obviously, but you're diversifying through different means. You're diversifying your exposure, so you're taking out of NVIDIA, and now you're moving into a different AI exposed company, right? But you're also diversifying your market cap, which actually allows you to potentially make bigger gains on smaller companies, right? But also take advantage of other spaces, right? You could also look at fintech right? AI companies. I think SoFi's been kicking around an AI idea. But you could get out of just saying so concentrated in one name, for example, like NVIDIA, and move, even if you love AI and you think that is the future, that's why you're so heavily invested in NVIDIA, you could take that money and move it into these other names while also reducing your risk exposure. Because you may be overexposed in NVIDIA, and as a result, you could still reap the benefits of investing in AI just through different pockets. So you're reducing your overall risk because you're not solely concentrated on one name, while also increasing your total theoretical amount of gain because you have exposure to smaller cap companies that tend to move a little quicker. What if you wake up one day and SoundHound's at $50? It just does whatever. They get bought out. Something happens, right? You wouldn't have the exposure if all your money's in NVIDIA. And I'll tell you one thing. We're not going to wake up one day and NVIDIA is going to move from 200 to 1,000 because that's roughly the same kind of move you'd see on SoundHound in the example I just gave you. From going from, $11-12 to 50, NVIDIA would have to go from 200 to 1,000. It's not happening overnight. But getting those bigger moves on these smaller companies is more realistic. So you actually could be limiting yourself by being so concentrated on one name. So I'm not trying to dismay your confidence in one stock or whatever. By all means, do whatever you like. I'm just trying to highlight how you could actually make more money while reducing your risk. That's my bread and butter. I love if I can always make more money and lower my risk. Beautiful. I will do that 10 out of 10 times. So that's really what I'm trying to drive home. And what I was trying to drive home with that whole segment there is if you love AI, you want to invest in AI, at least consider diversifying, again, not only through different companies, but different market caps in different sectors. Getting a wide net would let you take more advantage of the AI rally as a whole versus being solely concentrated on one or two names. That'd probably put a nice little bow on that whole shtick. Hopefully that helps. T-Burn says, awesome outline. Thank you, T-Burn. I appreciate you stopping by the stream today. I know you're here almost every time I'm live too, so appreciate you popping by. Negum says, thank you. Yes, way overexposed, and you're right. I think I'm limiting myself on making more money. Negum, it's funny because people don't think that way. And this person I love very much doesn't think that way, and I'm trying to get them to see the light in that regard where you could still make more. You could make even more money by not putting too many chips in one basket. There is a point where you can over-diversify, where some concentration makes sense, but you could still concentrate on the theme of AI, but in different pockets, right? That's where I think a lot of people don't really understand is they can still invest in AI here, everywhere, instead of just investing in one AI company. And I think that's where a lot of people get confused is they want to invest in the one AI company, and that's where you're not only, again, increasing your risk because you have all your eggs in one basket, but you're decreasing the amount of total money you could make, theoretically, because you don't have exposure to the other pockets of the AI market that could actually make you more money than the one thing you're concentrated on. What happens if all your money, again, theoretically, is in NVIDIA, and NVIDIA, marginally moves up or just flatlines for the longest time? Now, it depends on your trading style, and then meanwhile, all these other AI names pop off and go up 20, 30, 40, 50% every other day, and you're just sitting there with your NVIDIA and all your money is in it, making 1% a day, right? So you can still stay concentrated, still stay in the names you love, but I would more or less focus on the theme. If you like the theme of AI, hunt for those opportunities of really solid AI companies. And again, SoundHound's on this list because I'm personally exposed to SoundHound. I like SoundHound. That's a better opportunity for me to have some exposure in instead of putting more money in NVIDIA comparatively. Just an example. Okay. I'm tired of saying the word AI. There's a lot of AI. I'm done. No more AI. Let's look at the market. And I'll be honest, I fried my voice pretty good. So I'll probably look to wrap things up here pretty soon. Someone tagged me in the Discord. PRGO making moves. I might have talked about this on screen. Let me check real quick. Ooh, nice little pop there. Not much to write home about yet, though. Okay, back to the market. All right, SPY had a pretty decent sell-off here. Now looking to recover. Didn't fill the gap from yesterday, so we still have not filled the gap. However, we're above all of our EMAs and MAs on the 1 minute here, testing VWAP. So getting above that VWAP here might get a nice little push here back to this all-time high, or technically old all-time high. We haven't broken the new all-time high from open. If I'm a betting man, we make officially another all-time high. We break the new all-time high from open today. I'm pretty confident we're going to see that. I guess the one thing that would make me less confident on that is how the Qs are performing at the moment. It's a little sketchy, but IWM, so much strength in these small caps. I love it. I love it. I love it. I said at market open, you're more than likely going to tap this 225.72. Breaking over that, legs to 227.75, $2 move on small caps, and I love that. So use that as a nice trigger level. A lot of companies are going to react positively if that breaks. It's going to be one of those days where you could probably throw anything at the wall. If it sticks, you're going to make money. With the exception of our Mag 6, as I like to call them. NVIDIA is kind of farting around down here. Basically, the chart looks exactly the same to SPY. That's interesting. Microsoft not looking too hot. Almost got to 500. Low of date, 570. I'd actually look for a rejection literally right here. And for it to sweep and break that 500 and push lower, that'd be great today. It wouldn't shock me to see Microsoft down at least 1 to 1.5% before close, honestly. Remember, Google does have earnings after hours, so this could be a little finicky, but it's pretty similar to the trend here. And Apple looks like it's going to try to build a base around this 212.50-ish area. Amazon's boring. I wouldn't even look at that today as it's sitting right now unless something happens. And Tesla, again, earnings after hours, so pretty boring there as well. Let's check out our sectors real quick before I let you guys go. Let's see how materials reacted. Nice reaction off of... Oh, I didn't even look at the... I was speaking when it happened. What did we get? Existing home sales, slight miss, actually. 4 million was expected. The previous was 4.03. What came in was 3.93. So not looking like as many people are buying. For some reason, materials have gone up on that news. Interesting. Real estate also went up on that news. Interesting. Maybe because of the fact that the mortgage rate was pretty flat and home sales rate, I mean, it is a miss, but it's not by much. So that could be why. Let's see if anything else looks notable. Tech's trying to reverse. Staples just doing a slow grind up today. Energy pretty flat. Utilities sold off hard. They were looking hot at the open. Now it's basically filled the gap and flat on the day. Industrial's flat, but still up pretty solid. Healthcare is still up pretty solid. So I would look for your strength today to come in through healthcare. Possibly industrial some more. Could get a reversal on utilities in general. If tech can find its footing, this could be a nice little sweep and push. I wouldn't look at real estate today, either bullish or bearish. I don't love that. Materials are okay. I'm just trying to state where the opportunity is, so as you guys go through your day, you can take a look around and maybe consider some names. I like healthcare the most, assuming this low doesn't break. Healthcare adjacent companies, you're building a nice little base here on the day. And financials. I think the way financials are sitting, you could get a nice pop here in the near term on the daily chart. Consumer discretionary, again, Amazon, Tesla, so I'm not really worried about that. And comm services, not horrible. Comm services looks very similar to financials. There could be a nice push here in those two sectors. So you're going to want to watch XLF and XLC. Speaking from the daily chart specifically, that there could be opportunity on both of those sectors in general. All right, guys, I think that's going to wrap it up because if I keep talking anymore, I probably won't have a voice for tomorrow, and it is a lot for me to keep talking and talking and talking and talking for however long I've been live, so maybe one day I'll get a co-host and I can actually breathe and take a sip of water, but I refuse to have dead air on this program, so the times that I do, I feel awful, and I feel like you guys need to hear as much that just comes off the top of my dome as quickly as possible. So that's what I will continue to do here on the Atomcash Angle. Let's wrap it up, guys. Tomorrow we've got a stream at 9:15. So if you like the show today, make sure you pop by tomorrow. Tomorrow should be another good one. I think today's show is pretty solid, but tomorrow is going to be a good show as well. I'll also set you up for Thursday and Friday as we head into the end of the week. So should be a good time. As a result, I will leave you with my closing words of wisdom. Some say you'll need an extra trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, and remember, precision beats prediction every damn time. I will see you tomorrow at 9:15.
The time has passed, and that's a wrap. You're armed with the